These are 7 top stocks in pre-market with big percentage move today. While watching bullish pre-market price actions, let us inform you our review on LYT. Lytus Technologies just pulled off a wild move, shooting up 124% in pre-market trading, without any clear news driving it. That kind of jump usually raises eyebrows. When a stock moves this dramatically with no official announcements, it's often driven by speculation, a sudden shift in investor sentiment, or even just low trading volume amplifying price swings. Lytus operates in the content streaming and telecasting space, serving millions of users in India and also dabbles in telemedicine services. It's a company with an interesting mix of offerings, but it's not one that typically dominates headlines. A surge like this could mean investors are betting on a big development behind the scenes, maybe a partnership, acquisition rumors, or something brewing in their business model. But here's the catch. Without actual news to back up the spike, moves like this can be short-lived. It's the classic case of what goes up fast can come down just as quickly. Investors should keep an eye on whether Lytus follows up with any announcements, because if there's no real catalyst, this could just be a temporary pop fueled by speculation. Definitely one to watch closely. Our review on GTEC. Greenland Technologies just lit up the pre-market, soaring 89% after flipping last year's loss into a solid profit. That's a big move for a company focused on drivetrain systems and electric industrial vehicles, especially in a market that's been keeping a close eye on clean tech. So, what's behind the excitement? Greenland posted FY24 earnings of $1.03 per share, a major turnaround from last year's $1.20 per share loss. That's a massive shift, signaling they've cut costs, improved margins, or maybe both. Revenue did dip a bit to $83.94 million from $90.33 million. But here's the key. Earnings growth is outpacing the decline, which tells investors the business is running more efficiently. The market's reaction? A 72% pre-market surge, pushing the stock to $2.44. Anytime you see this kind of jump, it's worth digging into what's driving it. Was it just better cost control? Or is there something bigger brewing, like stronger demand for their EV powertrains? Either way, a swing from a big loss to a profit is exactly the kind of story that gets investors' attention. Now, the question is whether this momentum can stick or if it's just a quick pop before settling down. Our review on DRMA. Dermata Therapeutics is making waves, with shares soaring 63% pre-market after strong phase 3 trial results for its acne treatment, Zingari. Unlike typical daily acne meds, Zingari is a once-weekly topical treatment which could boost patient compliance and set it apart in a crowded market. The trial met all 3 primary endpoints, showing solid efficacy and safety, with statistically significant improvements in lesion counts and treatment success. Dermatologists see major potential here, given the convenience factor. With plans to start a second phase 3 trial later this year and an open-label extension study to follow, investors are betting on a clear path to FDA approval. If Dermata keeps delivering, this nanocap could have big upside potential. Our review on CISO. CISO Global is making waves in cybersecurity, with shares surging 37% pre-market after hitting a major profitability milestone. The company, once a pure services firm, has successfully transitioned into a software-led, services-backed enterprise, and investors are taking notice. For the first time, CISO posted positive adjusted EBITDA in late 2024 and now projects at least $34 million in profitable revenue for 2025. A big part of this success comes from integrating 13 acquired businesses and leveraging AI-driven security software to boost margins and cut costs. The company also paid off high-interest debt and expects $5 million in additional software-related bookings with 75% margins. With 500 plus customers and strong insurance partnerships driving sales, CISO Global is quickly solidifying its position in the cybersecurity market. Our review on DMN. Damon Inc. is turning heads in the EV motorcycle space today, with shares up 24% pre-market despite no official news. That kind of sudden surge usually signals investor excitement, whether it's anticipation of upcoming developments, broader market momentum, or just a reaction to increased interest in the electric vehicle space. Damon has built a name for itself by pushing the boundaries of electric motorcycles, blending high performance with cutting-edge safety and technology. At the core of its lineup is the Hyperdrive powertrain, a 500V exoskeleton system that integrates the battery, BMS, charger, and inverter into one sleek, lightweight design. The result? More power, longer range, and less maintenance compared to traditional gas-powered bikes. Add in safety features like Copilot, which uses predictive awareness technology to detect road hazards and shift, a system that dynamically adjusts riding positions, and it's easy to see why Damon has captured investor attention. With models like the Hypersport and Hyperfighter designed to rival high-performance gas bikes, the company is positioning itself as a major player in the future of two-wheeled transportation. While today's jump might be fueled by speculation, it's a clear sign that investors are paying attention. Whether this rally has legs will depend on what's next for Damon, but one thing's for sure, it's a stock to watch in the EV space. Our review on TDTH. Trident Digital Tech Holdings is making some serious waves right now. The company, which focuses on digital transformation for small and medium enterprises, saw its stock jump by 23% in pre-market trading after announcing a strategic partnership with Silku and Haitu. This collaboration is all about powering e-commerce growth and improving the customer experience. They're combining strengths in digital transformation, retail, and the beauty sector, with key focuses on data analytics, supply chain optimization, and platform integration. It's a big play, especially as they look to expand across Southeast Asia. Trident's Web 3.0 identity platform, Tridentity, will serve as the backbone for this partnership, ensuring a secure, seamless digital ecosystem. Silka brings its e-commerce know-how and access to TikTok Global Shop, while Haita's expertise in beauty and cosmetics will help drive global market expansion. It's an exciting time for the company, positioning itself at the forefront of digital innovation and e-commerce growth. However, things took a turn after the announcement of a $1 million share repurchase program. While this could signal confidence in the company's future, it's worth noting that the stock saw a sharp drop, more than 50%, once the market opened. The program itself, starting in April 2025, is aimed at boosting shareholder value, but the market's reaction suggests some uncertainty or perhaps mixed feelings about the timing. Investors will want to keep an eye on how this plays out, as the company's long-term strategy and how it handles its repurchase plan will be key to its next steps in the market. Our review on OCEA. Ocean Biomedical is making some noise lately. The biopharma company, which is focused on developing treatments in oncology, fibrosis, infectious diseases, and inflammation, has seen its stock jump 23%. But here's the kicker. There's been no news to explain this spike. Now, this type of movement is often curious, and it could suggest a few things. Maybe it's some investor excitement building on the company's potential pipeline of drugs, or a bit of speculative interest in their ongoing work in oncology and malaria treatments. Ocean Biomedical's lead efforts are in developing humanized monoclonal antibodies aimed at cancers like non-small cell lung cancer and glioblastoma multiforme, and they're working on some promising malaria drug candidates too. The stock movement could be tied to the progress in any of these areas, but when there's no specific news, it can often be a sign of a market reaction to expectations rather than hard updates. Either way, it's a company worth watching, especially with its wide-ranging drug development pipeline. Keep an eye on whether this trend holds up or if it's a short-lived spike. It's always worth looking deeper into what might be driving investor sentiment, even when the news isn't obvious. Please subscribe, give the video a like, and watch more from our playlist. Thanks.